To have the opportunity to sit and talk with some of the best in the game for their trading insights, that would be an incredible opportunity. And for the majority of us, though, that's never going to happen. But we are fortunate that these people who can impart trading wisdom from their own experience on the road to their success, they're often happy to be interviewed. And it's in these interviews that they share their rocky road stories to trading success, the lessons that have taught them, and how they eventually dealt with them. And you could fill a blog, a book, and trading videos full of quotes about trading risks, the methods, and psychology. But I want to start with 6 that you could really hit the ground running with by making them a part of your own trading and your own thinking. And our first one comes from Van Tharp. A peak performance trader is totally committed to being the best and doing whatever it takes to be the best. He feels totally responsible for whatever happens and thus can learn from their mistakes. These people typically have a working business plan for trading because they treat trading as a business. And I think this really highlights taking full responsibility for your trading and not pointing blame when it goes off the tracks. And if you choose to commit to being a trader, it really makes sense to use that time productively and really work towards being the absolute best at what you do. And if being just an okay trader is good enough, you may be leaving a lot of potential left unearthed. And David Rubenstein, persist. Don't take no for an answer. If you're happy to sit at your desk and not take any risk, you'll be sitting at your desk for the next 20 years. You know, at the first sign of struggle, most people just give up and they take that path of least resistance. And you have to accept that there's going to be frustrations in trading, just like in any other career. And it's those that pick themselves up and learn to accept the challenges and find ways to minimize their impact. Now, those are the ones who really have a great chance of reaching their goal. Paul Tudor Jones. If I have positions going against me, I get right out. If they're going for me, I keep them. Risk control is the most important thing in trading. If you have a losing position that's making you uncomfortable, the solution is very simple. Get out, because you can always get back in. Now, many people think that the trade entry is the most important thing in trading, but Paul Tudor Jones puts what's important in perspective with this trading insight. One trade will not define your success, so if it's not going well, simply exit and regroup. Being stubborn and holding on because the trade will come back, it's going to cost you. You take too many losing trades where you didn't properly define your risk, and eventually you're going to lose your account. It's really that simple. Ray Dalio. More than anything else, what differentiates people who live up to their potential from those who don't is a willingness to look at themselves and others objectively. We all have a tendency to really have a high opinion of ourselves in various circumstances, even when faced with information to the contrary. And in trading, you have to know what you don't know and be free enough to admit that. Now, since psychology is vital in terms of trading, you also have to be able to point out flaws in your personality that can affect your decision-making process and really find ways to lessen their impact. You're going to learn a lot about yourself as you venture forward in trading, and some of the truths that you find may be a little bit hard to accept. Alexander Elder. The goal of a successful trader is to make the best trades. Money is secondary. Now, assuming you do have a statistical edge in the market, the best thing to do is just focus on the process. One stumbling block that a lot of traders face is trading outside of their trading plan, leading to taking low probability trades for various reasons. And one common issue is they take that trade to make up for the losses that came just before it because they know, quote unquote, that the market will deliver. In the end, this type of trading never really leads to consistent success. If you're trading an edge, focus on doing everything right, the process, and the money will come. Michael Milken. My experience indicates that most people who've accumulated a great deal of wealth haven't had that as their goal at all. Wealth is only a byproduct, not the original motivation. Now, this is one of my top picks in terms of trading insights. I call it the why behind your trading, and it can lead to some serious soul searching. If there's a big enough why behind what you do, your chance increases that you will reach your goal. Why do you trade? Yes, it can bring you money, but what does that mean to you? What can it provide in terms of enjoyment and family experiences, anything that you cherish? It could be anything from being able to stay at home as a parent all the way to doing good for your community, your city, the world. Just dare to dream with your why. And knowing why you trade will help you stay close to your trading plan. It'll motivate you to deal with frustrations, and above all, it'll keep you from doing something that is the polar opposite of a professional approach to your trading career. Once the markets find a consolidation area, You now have the opportunity to play a support or resistance holding or failing type of play. 4 types of trades, and there are literally hundreds of ways that you can take advantage of these trading opportunities. In this chart here, there's a move that we see time and time again because it's the nature of the markets. What occurs here is during the markup phase, that big green candle attracts the eyes of traders who jump into the move. Now, these traders are actually late to the party because more astute players are in the move prior to the break. You'll notice in the accumulation area, immediately prior to the break, we have price sitting up against resistance in a 2-candle range. This is an opportunity for a trade where you think one of 2 things will happen. Number 1, resistance will hold and you play a short back into the consolidation. Number 2, resistance will fail and price will rally to the upside. And while some traders will use a rate of